Okay, for this next video, we're going to cover Schedule O, Parts 1 and 2 for the organization or reorg of the foreign corp. And this is also used to report acquisitions or dispositions of the stock. So who needs to file Schedule O? If we go back to our table here with the required information, we can see Schedule O is separately stated, right, Part 1 and 2. And so Part 1 applies when we have a Category 2 filer. Part 3 applies when we have a Category 3 filer, okay? Now, in this example, remember, John is basically almost all these categories. He is a Cat 2 and Cat 3 filer. So we're going to be completing Schedule O, both Parts 1 and 2. So Schedule O, Parts 1 and 2 are, it's a schedule that you generally file the very first year the entity is formed, but you don't have to file it every single year going forward unless there are one of these events, right? So if you have a reorganization of the company, if there's an acquisition or disposition of the stock to make it a Cat 3 filer, then you might have to file this again. But generally speaking, you're filing this the first year, and then in years 2, 3, 4, 5, and so on, if there's no changes in the corporate ownership, then you're not having to file this again, right? You will have to file it again in the future if there are one of these events that occur, obviously. So if you have another Cat 2 or Cat 3 situation. But generally speaking, most of the time, the initial 5471, you're definitely doing this because you have at least an organization of the company. And so then going forward, you don't have to do it. But in this example, we do have to do Parts 1 and 2 because we do cover both category filers. So let's start with the top here. Obviously, similar to all the other schedules before, right? We have John Q. Taxpayer. He's the person filing this form, his ID number, the name of the company, and then that reference ID number, right? Consistently using the same one. Now, in Part 1 here, it's asking us to complete this information for U.S. officers and directors. So remember our table here. Part 1 of Schedule O is for the Cat 2 filer. So when we have Cat 2 filers, we've got to do Part 1. Now, what's the Cat 2 filing situation? Cat 2 filing, if we remember, right, this is when you have a U.S. person that is an officer or director of the company, not necessarily an owner, right? So you can have someone who is an officer or director, they're not a shareholder, but while they're an officer or director, there's somebody that comes in that's a U.S. person and acquires enough stock to meet this Cat 2 situation. So in this example, John is serving all these roles, right? So he's not only a shareholder, but he is an officer and a director. But you can definitely have scenarios where the person filing the form as a Cat 2 filer, they're not an owner, but they still need to do Schedule O because they might have had a U.S. shareholder come in and acquire sufficient stock. So that's really what's happening with Part 1 here. So we have the name of the shareholder, that's John Q. Taxpayer, the address here, his ID number, and the date that he acquired the shares, right? So the date of organization. Now the date of additional 10% acquisition, this would, again, if we think about the hypothetical, file this in year 1, and then years 2, 3, 4, and 5 down the road, no filing required. But then if John buys additional stock, so if he gets an additional piece of the share, and that's an additional 10% acquisition, then we have another filing instance where he has to report this again, right? So we have the original acquisition, and then if in year 6 he gets an additional 10%, then when we file this again in year 6, we have the date of the additional acquisition, okay? So now Part 2. Okay, this is completed by U.S. shareholders when we have Cat 3 filing situations, right? So in this case, we had a U.S. shareholder that acquired enough stock to meet that 10% stock ownership requirement, right? So the very first day that the company was organized and issued the shares, John Q. Taxpayer, he is a U.S. shareholder. He acquired sufficient stock to meet that 10% ownership requirement, so he is the shareholder in this scenario. So we've listed the shareholder's name, tax ID number is above them there. The type of return filed, so this is the type of return that's filed, the U.S. return that's filed by the shareholder, right? So we have an individual here, so John would be filing 1040. If this shareholder was, let's say, a C corporation, then they'd be filing 1120. If it was an S corp, that was the owner, we'd have 1120S, partnership, 1065, and so on. Now the date return filed, what they're asking here is, what was the latest U.S. tax return that was filed? This is a 2021 Form 5471. So the last tax return that John would have filed, because remember, he can't file yet because he's doing the tax returns right now, but the last return he would have filed would have been his 2020 Form 1040. And his 2020 Form 1040 was filed July 15th, 2021. So he went on extension, filed it July 15th. The type of, or the IRS office where it was submitted, if you paper filed it, enter the IRS office address there. If you e-filed, you can say e-filed. In column C here, they're asking date, if any, that the shareholder last filed information return under 6046. That's the 5471, right? And then more specifically, when did you last file Schedule O, right? So if you did file this schedule previously, then you would indicate the last date that you submitted information that contained this information with your tax return. In this case, it's the first year, so we're not having it's blank, right? This is the first time we're having to file any of this kind of information with the IRS. And if you want some additional reading on this issue, if you Google or just go to the code section, IRC section 6046, the title of that code section is specifically, it says returns as to organization or reorg of foreign corporations and as to the acquisition of their stock. So basically, the Schedule O, right? So again, Schedule O here, when's the last time you had to submit this information? I don't know why it's an attempt by them to be more confusing perhaps or more technical, but I think, if they just put that Schedule O in there, that would be a little more helpful than the section of 6046, but that's what they're asking. Okay, so section B, this is where we list any kind of U.S. persons that are officers or directors of the FC, right? So in this case, John is both a U.S. shareholder and an officer or director. So section B, we have the name of that officer or director, the address of that person, their social security number, because again, remember, they have to have a social security number, or they could have an ITIN. You can still be a U.S. person and have an ITIN if you are living and working in the U.S. So we've got the U.S. officer, address, SSN, and then check whatever boxes are appropriate. Right, so remember, director means you're a board member. Right, so you're a member of the board. Officer is someone who is holding some type of title with the company, like your C-suite executives, right? So CEO, CFO, COO, Chief Technology Officer, and so on. So those are the officers generally of the corporation. Also includes the treasurer or the secretary, right? The secretary is also generally an officer. Yeah, again, in this case, it's pretty straightforward, right? John is wearing many hats, so he's both in this context. Remember, though, that the officer or director doesn't necessarily mean that you're a shareholder, right? You can definitely have U.S. persons that are one of these roles, or perhaps even both, but they might not necessarily be a U.S. shareholder. Now, Section C, acquisition of the stock for those U.S. shareholders. So in this case, we have John here. He acquired stock in the company, right? So we have the name of the shareholder, the class of the stock. There's not a lot of space here, so you can see I'm abbreviating, common class A. That's sufficient, right? Just put down as much information as you can fit within the space. The date of acquisition, the method of acquisition, and then the amount of shares that he acquired, right? So there's columns for direct, indirect, or constructive. In this case, he purchased the stock. He acquired it directly from the corporation itself as part of the organizational process, and the amount of shares he received were 750 shares. Now, the second page here, the overflow, we have the amount paid and then the name or address of the person from whom he acquired the stock. In this case, because the stock was issued directly by the company, it's okay to just enter the company name here, right? That's sufficient. Where this would be different is if he bought it from a third party, right? So if there was already another shareholder and then John came in, a couple years later and bought the stock directly from that shareholder, then you would have the name of the shareholder here, right? So he acquired them from another shareholder. And then the total amount paid or value given, that's the portion of common stock amount and then the APIC, right? The additional paid in capital that John put into the company. So that's the $450,000. Section D, disposition. Again, you might have a category filer where you had an acquisition or a disposition of the stock that hit that 10% threshold. In this case, we had no stock sales, right? So the disposition section here is blank for those obvious reasons. Now, Section E, organization or reorg of the foreign corporation. Because this was an initial year for the corporation, right? It was organized in the current tax year. We should be completing Section E, right? So in Section E, what we've done here is we've laid out the number, each shareholder that basically contributed capital to the company in exchange for stock as part of the organizational process, okay? So we've got John, I've got the fake Bermuda holding company there. The ID number, right, there's John's information, the date of the transfer. The assets transferred to the foreign corporation, right, in column D here, we have 1, 2, and 3 for information on the transfer. Both parties just transferred cash. That's the fair market value of the cash, and then the adjusted basis cash. Your basis in cash is the same as the fair market value, right? That's generally the way it goes. The reason why they have separate columns here is because it's quite possible that you transferred property. So let's say tangible or intangible personal property, where the fair market value is one thing, but your basis in the property is something else, right? So that's why they want to see the separate columns. And then in column E for the last one there, the description of the assets transferred by or notes or securities issued by the foreign corporation, right? So in this case, we gave up cash, and in exchange, the foreign corporation issued each shareholder common stock and the one class of Class A shares, okay? Now, Section F, additional information. If you have, if these apply to you, then obviously enter the information on the line items, right? So Section F, question A asks if the foreign corporation or predecessor filed a U.S. income tax return for any of the last 3 years, attach a statement indicating the year for which it was filed. Right, so again, this would apply to you if the foreign corporation filed a Form 1120-F. So if the CFC had an EIN and it was engaged in U.S. trade or business, had effectively connected income, then you would need to file an 1120-F to report the income, pay the tax, and so in that case, you would enter that information down here. Right, so and then item B lists the date of any reorganization that occurred during the last 4 years. It doesn't apply here. This is a new company. And then lastly, if the foreign corp is a member of a consolidated group, attach a chart that shows the corporation's position in the chain of ownership, right? So put together a structure chart, organizational chart, and attach that behind this page of the Schedule O. Okay, so that covers it for this schedule. Quite a lot of information. Again, the one nice thing is generally you're only doing this the first year, and then you don't have to keep doing it. Obviously, if you have changes in corporate structure or stock purchases or sales, then it will come up again. But the one nice thing is, the Cat 2 and Cat 3 filers, most of the time you're not having to report a lot of this information. But for this year, we're doing all of it. So I hope that was helpful. If you have any other questions, leave me a comment below. Happy to answer any I can, and I will see you on the next video.